Hello, everybody. This is a strategy set from Zacks Investment Research done on Monday, the day after the Super Bowl. I hope you guys enjoyed that incredible effort put out by the Bengals and the Rams. And I certainly did watch it to the end. So, first off, before we go any further, please read the disclosures about this video talk. All right, so let's set off. 2022 strategy set. And today's topic is the megacaps that are on sale. What should you buy? Let's take a look at a lot of megacaps. I don't want to talk about the $1 trillion ones only today. I want to talk about things all the way down to 150 billion in market cap, but mainly focus on the 200 billion plus in market cap companies, particularly over the last 10, 20, 30 years. And we're going to do that to start because we need to get a frame of reference together to think about how the latest sell-off is playing out and whether there's an opportunity for both traders and investors here and what those opportunities actually are. So let's get on to it. This first slide is very a noisy slide, but it's a very comprehensive one. And what it is a count of megacap companies over the last 10, 20, and 30 years by market capitalization. So just so you understand how to read this, you can look at the very top level of ordering the columns. There's the three sets of decades running from the 2010s to the 2000s to the 90s, going from left to right on my screen. And then basically over the last 20 years and the last 30 years in a separate box to the right of that. So the basic idea here, this is a very noisy slide, like I said, but there's a lot of information here. So those of you that can get a hold of these decks or stop the recording here, this is very helpful. First of all, let's talk about the names of these companies. Now, these are the names of companies that achieved at least 150 billion market cap over the last 30 years, sometime. I've got 18 of these stocks at the moment over 200 billion in market cap. You got to remember there's 4,400 stocks in the United States, so 18 stocks is not a lot of stocks. And that's out of a total of 23 that made it over 200 billion in the last 30 years. So it's very, very hard to get to be a big, big stock. But lately, we've gotten a lot of these stocks that make a lot proportion of the S&P 500, and they matter more than ever. So let's just talk about some of the names here so we go no further. But I want to point out to all of you that we counted 5 of these names in the 90s, 8 of these names in the 2000s, and 10 in the 2010s. So really, just from a count perspective, how many we can count, there are double these market cap companies that are huge now than there used to be. So that's the other thing to understand when we talk about valuations, the S&P 500 at a high level or the ETFs that track them, they're really counting on these companies. And I think Wall Street also has changed here as they rolled these tech companies up. It wasn't just a great idea like Microsoft or Apple. It's also their acquisitions of Wall Street feeding them companies. This is true for some more than others, but keep this in mind. So I just want to go through all the names first. Microsoft, ExxonMobil, Walmart, GE, Apple, Google, Berkshire Hathaway, Procter & Gamble, the B shares of Berkshire Hathaway, Pfizer, Johnson & Johnson, JP Morgan, Chevron, Google, Intel, Facebook, Baba, PetroChina, the only company that kind of comes from the old state industries of China, Bank of America, Wells Fargo, Amazon, AT&T, Citibank, Verizon, Cisco, Coke, Merck, IBM, Novartis, Home Depot, HSBC, the big British Hong Kong-based banking company, Toyota Motor, which is in Japan, Disney, Oracle, and AIG, which found its way in there early. I don't know if it's in there anymore. So the point here is there aren't a lot of international companies, even going back 30 years. It is really an American phenomenon to build big, big, strong companies. And that's something that I learned from this. But they are getting more important. They're certainly a double influence now than they used to ever be. So the megacaps, top 10 companies by geographic revenue and their tickers. We'll go through these in order here. Again, keep in mind that we're going back from here into these slides. So the top 36 tickers. So I'm looking at, again, now up and down to 150 billion in market cap. 150 billion market cap is a giant company, people. It's just huge. So within the Zacks sectors, we've got 16 of them, unlike the S&P 500. I counted 11 in computers and tech, 8 in finance, 4 in retail wholesale, 4 in medical, and 3 in oil. So there's no question, just looking all the way to the right of here, looking over at this numbers here, you can see that computers and tech number just jumping out at you. And just below it, you can see the finance number. So one thing that's happened in the last 10 years is computers and tech megacaps have become the issue. But before them, it was the finance companies. And before them, there was the oil companies, way, way back. And in between those two is two groups that kind of get overlooked as megacaps, which is the retail wholesale groups, the Walmarts of the world, the Cokes of the world. I mean, there's some giant companies out there that get big in retail. Going all the way back to the Super Bowl with SoFi Stadium, that was actually Walmart money that got built that stadium, not SoFi. And 4 in medical. Medical, again, a very overlooked mega cap sector, but the drug companies get rolled up, they buy a lot of drugs, they get big. And they are also always have been in here from the beginning. So what's different now? This is a fascinating slide. Megacaps, top 10 companies, geographic revenues in 2021. So this is very recent data. And I just want to point out that, we can look at Japan, Europe, the rest of Asia, Greater China, the Americas, and Apple, and see that, the Americas, pretty much 40% of the story. But Apple, that means 60% is not. And this is typically the case. Look at ExxonMobil. No different. ExxonMobil is 40% US, 60% non-US. Microsoft 50-50. Procter & Gamble 40-60 almost. Very similar. And then you get to something like Intel, which gets very balanced. And then it's actually the US is only 18%. So the chip businesses that underlie this are actually more diversified than these other businesses. And that is true. Chip businesses are largely based, coming out of the science parks in Taiwan and in parts of Asia more than other ways. And you can see that Taiwan number, 17%. That's what I'm talking about. Singapore, 18%. I was very surprised by that. But again, not surprising that it's Asian-based because of the manufacturing intensity of that region for chips. Now, Google's an interesting thing. Again, 46% Google, not very different than ExxonMobil. Walmart is much more dominant as a US player because it's a physical retail entity. General Electric, kind of forget about this company. It was, in operation at one point with 130 countries. Still there, very, very big country spread, but not as actually spread out as Microsoft. Microsoft was in 190 countries. So this is very fascinating. I mean, look at Apple. It's only in 25 countries. You would think Apple would be in more countries than 25 countries, but it is just 25, which is telling us something else about the tech spread is US centric and Asian centric to Europe centric. There's a lot more parts of the world out there, folks. So Facebook again, 60-40 kind of split. Only 24% Europe, 23% Asia, and very small part of the rest of the world. So Facebook's kind of that story. The rest of the world doesn't really play a role. But keep this slide in mind is just kind of a basic framework for how the United States gets to about 40-45%, and then it spreads to the rest of the world. All right, 8 top companies, revenues from 2012 to 2020. This is a great chart. Look at each box carefully. This really tells the story of why the mega caps, the top 8 companies from the last 10 years really became a story on their own right. And you can see for yourself how different Apple is, Microsoft is, and Google is, and frankly, even Walmart, relative to these other players. You can just see the sloping lines. I mean, the Americas for Apple, clearly a dominant player. Microsoft, no doubt that the United States has played a huge role. Google, absolutely clear. But then you see things like the others. Cisco, Pfizer, Intel, and ExxonMobil are seeing this sliding, declining revenue stream or still going sideways. So the other thing I want to point out here, mega caps have been glamorized. But as we get into the returns of the other types of areas, the ExxonMobils, the Pfizers, the Ciscos, some of the returns over year and year are not that great. And you can see why. They just don't have these upward sloping revenue tracks that these other groups have. And that is critical. You still need to see increasing revenue and earnings growth to drive up a long-term hold play in the megacaps. It's not just clear that you can buy any old megacap. This is a critical slide. All right, so let's get into the price returns from the last 20 years. This is a log scale, by the way, because we have some incredible returns. Remember, Google has returned 5,432% over this slide period. Apple, if you went back to the very, very beginning of this thing, just an enormous return. I mean, people forget how small you could buy Apple, 20, 25 years ago. Now, let's take a look at, for example, Warren Buffett at Berkshire. He has returned 585% versus the S&P at 467. So over 20 years, he did add another 120% to the returns. But there's no comparison to the returns you could have picked out of Google and Apple. There's just no way. And you can see Apple just taking off and Google taking off in that top chart. These are the lines I want to pay attention to. Again, it's this Apple slide, and you can see just how impressive the top slide is. Apple and Google just take off. Microsoft's coming up next. You got to keep in mind, Microsoft is a cloud services provider. It has that global space. It probably will keep running. And you can see at the bottom there, if you looked into other traditional mega caps prior, the Johnson & Johnson, the Walmart, the ExxonMobils, the Pfizer's, the GEs, they actually underperformed. They underperformed the S&P 500. So it is not the case that you can just pick a mega cap and they always outperform. They need that revenue growth, usually tied to the tech sectors. The other ones actually underperform. You get big conglomerates, tough to grow when you're big. And that's sort of been lost on us. Tough to grow when you're big has kind of been lost on us. All right, so let's talk about the last 3 months change. This is a very different setup. Microsoft down 9%, Google 5%, Apple still growing, and Amazon down 6%. Is that very different from the other players? Well, actually, yes and no. JP Morgan is down pretty much the same. AT&T, which is a very defensive stock, is going sideways. Then you've got your big plays in ExxonMobil, and actually Wells Fargo. The financials have done really well in this environment because of the rate situation. So how should you play this? It's a great question. Trading-wise, short-term trading-wise, it's tough not to trend follow those ExxonMobils and Wells Fargos. But as an investor, I am very attracted by these names that have sold off here. Microsoft, Google, Amazon, and JP Morgan. All right, so top 20 companies on a forward 12-month PE valuation. This is a beguiling chart. I think, again, you're buying growth and don't forget about it versus things that are not growing. So this is where it gets tricky. The Microsoft's got the highest forward 12-month PE at 30, Apple's at 27, Google's at 23, versus Walmart at 20. But again, remember that revenue chart. Walmart actually is growing domestically. And JP Morgan's at 14 and AT&T is at the bottom at 8. So I guess here you just want to factor this in. But if I were looking at this all together and said where the play is, I'd probably pick Google. I'd probably say Google at 23 is a better play than any of the others. All right, forward 12-month price to sales valuation levels. Kind of a similar story. Microsoft's always overpriced. This is that cloud story. Again, much like other areas like Amazon, cloud is a much bigger player than you realize. Google is kind of the third player in that cloud space. And Apple actually looks a little unattractive given how overpriced it is at a price to sales level. And then you see like JP Morgan and AT&T are down in the dumps, priced as value stocks, really. Again, here it's about what your forward view of the growth is. And it might be a middle way to figure out the Googles over the Microsofts. But again, people are making money on Microsoft. That's why they're buying it. And you can look at that chart. It's pretty steady. All right, price to free cash flow. Kind of a noisy chart. I didn't find it that interesting other than companies away from the noise at the bottom here that are priced, really from actually bringing cash into the businesses very attractively. This was an interesting idea from an investor perspective, not a trader perspective. Walmart, Alibaba, and Facebook look really good right now. And I think the value investors out there in the investing institutional world are looking at those names. Okay, DuPont analysis. This is different than what we'll get to, and we're going to get through enterprise value to free cash flow before we get to it. So I just wanted to jump ahead before we go back. This is a little different idea. And again, but still based on free cash flow. So we had price to free cash flow. Now we're looking at enterprise value to free cash flow. Different names that come up here. Walmart, Pfizer, Bank of America, and Amazon look good here. These companies might be of interest to you as an investor, again, not a trader. When we get into these types of slides, price to cash flow, these are values, screens that we've put up for you. All right, DuPont analysis is another idea. A very noisy slide. I would focus only on the return on capital employed percentage, which is ROCE. You'll see it to the very far right here in both of these slides. And if you do that and you look for numbers that are above 20 or a little near 20 and above it, these are the names that come to play. Apple, Microsoft, Google, Facebook, Amazon again, but also don't forget Home Depot, Intel, Oracle, Pfizer, and Verizon also look good. So there's kind of two sets here. The big mega caps obviously growing strongly, and then a lot of other companies that are actually, from a managerial perspective on getting returns out of their capital employed, are very well run companies. So again, here's another set of ideas for looking at how to play this market. And again, it's really your time horizon and how you've diversified your portfolio. All these things do matter for this type of thing. All right, we're getting toward the end here. I just want to show you the final reason you want to buy these stocks. And that is the largest institutional holders are Vanguard, BlackRock, and State Street, to no surprise. Why is that? They're the big ETF companies. And ETF companies will put, particularly in market weight holdings, disproportionate amounts of their assets into these companies. This makes a lot of sense. So again, from a ESM perspective or ESG perspective or any of these institutional holding perspectives, you got to own these market cap companies that are big. And that has given you another source of buying strength and stability for you as an investor or a trader. So keep that in mind. And that is it for me today. I hope you enjoyed it. We probably will revisit these in a few weeks and see how they're doing and get more into it. It's just simply too important a subject to not do more work on. So for those of you who have enjoyed this, here is the information and how you can get a hold of us. There's a few different ways to do this. This is a Zacks professional services call. Our phone number, 866-794-6065, 866-794-6065. And our email, strategycall@zackspro.com. Obviously, also, you can go to the web, find us on zackspro.com. We've got a Twitter feed, and we've got a LinkedIn page. So please do get a hold of us. I hope you enjoyed my talk about the mega caps, and that will be it for me today.